Good morning. It's great to be here and see such an energetic crowd and to meet all the volatility coaches here. So today the topic which I'll be speaking about is the emerging trends in index funds and ETFs. Now, index funds and ETFs are a remarkably simple, almost stupidly simple concept. You will just blindly replicate a benchmark. It was created in the first one was created in 1971 actually, and 1976 Vanguard ने launch किया था. So 1979 was the Sensex launch, और हमारा जो पहला जो index fund था US में, that was launched in 1976. उसके तुरंत बाद जो हुआ था, वो Vanguard के लिए अच्छा नहीं हुआ था. It was what we saw was that वो index जो launch किया था, वो underperform कर दिया, and it was a very very rough and bad start. उसके बाद वहाँ से index funds across the world have seen a tremendous growth, and in India also what I'm going to show is that there has been an accelerated growth in index funds here also. What I want to speak about here is that why ये जो शुरुआत हुई है, जो अच्छी हुई है, जो rapid growth हुई है, is it sustainable या एक fluke है? ये जो तुक्का हुआ है अभी, वो active will come back, and active को वापस आने के लिए what is required? That is what I want to discuss about. So brief introduction first about Navi Group, because Navi है, so I want to introduce us as well. So Navi Group is promoted by Sachin Bansal, and Sachin Bansal का नाम I hope most लोगों ने सुना ही है. Flipkart में के founder थे and Flipkart के promoter भी थे. He sold Flipkart, and then after that he felt that अगला जो revolution है वो financial services में ही आएगा. तो for that he set up first lending operations. उनका vision है कि एक digital financial services जो entity है वो set up करना है. So he set up first lending, फिर उसके बाद उन्होंने एक insurance business खरीद ली, and the most recent one which he's bought is AMC, which is what Navi Mutual Fund or AMC is. So we are young. It's been almost just a year and a bit since acquisition, and वहाँ से the शुरुआत has happened. We are focusing right now, I'll put it, more on passive. पर active में भी क्या चाहिए for it to become popular is what we will also speak a bit about. So this is the growth in index funds. It is not very clear, but what it's saying is that the AUM in terms of percentage, in terms of absolutes as well, index fund की growth have grown from, let's say, 5,700 crores in 2019 to 83,000 crores in 2022. So that's been an amazing growth which has happened in the recent past. And the folios also, that has grown 8x as well. Now the question is, has this been just something which one segment has done, or is there a retailization also of this? And in that also we have seen the retail AUM in this has also grown from 1,500 crores to 12,000 crores in fact recently. So that's a huge jump in index fund AUM as well. So these are facts. I mean, this is what has been happening. ETFs, which is another form, index funds and ETFs together are passives. Together, they mean that they are growing extremely fast, not just in terms of AUM, but also in terms of folios as well. So that is the overall growth. These are facts. The question which we have to ask is this sustainable? And what does active versus passive जो है, लोग बोलते हैं active versus passive. Active and passive is one better way to look at it. There is active and there is passive. दोनों को साथ में चलना चाहिए. And what does it mean for an investor portfolio? So for that, what we are starting off asking is a simple question, which is that what is an active fund? मैं ये बोलना चाहता हूँ कि active का मतलब ये नहीं कि activity. Active का मतलब नहीं है activity. What that means is that you should be able to do a high deviation from your benchmark. That is what it is. But just starting off first on what has made index funds most popular, it is this, that, which you can't see on the screen because it's not very clear, but what is clear is that the number of active funds which is beating the large cap indexes over the last 5 years has fallen to just about 20%. So the reason why index funds have become popular is because active funds have not done as well as a simple benchmark which is being created. The question, and this is based on what is called the SPIVA scorecard. What that means is that what the SPIVA scorecard does is that it just looks at this particular analysis of active funds versus the benchmark itself. So the question is again, is this sustainable, and what does active share, what does active really mean? What does an active fund really mean? And I get back to the point that active is not activity. Just because there's a fund which is moving the stocks actively, it does not mean that it is an active fund. Active का मतलब है कि it is not anything like the benchmark. So ऐसा मानो कि you have a stock of, you have a portfolio, एक fund portfolio जो है, which is exactly same as the benchmark. It will give you benchmark returns. That is a zero score in terms of active share. If you go from a portfolio जहाँ पे benchmark say there is nothing absolutely, there is nothing, no similarity at all between the benchmark and the actual portfolio. That is 100 in terms of active share. So what we are defining is this particular bands now. This is some analysis and study which was done earlier. And so if you say the 0 is fully passive, 100 is fully active. So 0 to 20 we'll say is that it's mostly passive, which means that most of your returns are coming because benchmark में जो है वही है portfolio में. 20 से 60 में also you are saying it is closet indexing. What does closet indexing mean? इसका मतलब कि आप एक्टिव तो है, पर आप छुपा के बेसिकली आपका रिटर्न जो है ज़्यादातर बेंचमार्क से ही आ रहा है. इट इज़ कमिंग लेस फ्रॉम द एक्चुअल पिकिंग स्टॉक्स विच आर आउट ऑफ द बेंचमार्क. So that is 20 to 60, and 60 से ऊपर, which means your portfolio is genuinely active. इसका मतलब है कि you have completely different portfolio compared to the entire benchmark itself. That is called pure active. So if you look at what the significance of this is from, I've taken an example from US, but this can be replicated for India as well, which we can ensure that it can be done. It can be done by just picking the portfolios and doing this. But this is one portfolio of the Magellan fund जो है US में. US की जो Magellan fund है, that was among the largest funds ever in terms of active funds. So that was created by Peter Lynch. Peter Lynch के जो performance थे from 1977 and to the 1990 जब वो fund manager थे वहाँ पे, he beat the S&P 500 by 150% during the last 10 years of the management. So it was a stellar, it was an amazing record. But what happened is that as his fund size grew, उनका जो active share था वो गिरता रहा. That was the blue line which we are looking at in the first. And so as his fund size grew, it became more like the benchmark because he became so large that he was not able to pick up more and more smaller companies. And the performance also went closer and closer to the index. So that is how the indexation happened for the largest active fund in the world almost at that time, I think. So that is the significance of active share. And what this means is that a fund which is genuinely active, a fund which is like nothing like the benchmark, is something which will give you a return which is very different from the benchmark. And that is how you will generate absolutes. That's what भरत जी ने भी कल कहा था कि absolutes पे focus करेंगे तो फिर relative outperformance भी आ जाएगा. And that is what the focus of active funds is. So what we have done is we have looked at active share in the Indian context. And the significance again of this is that active performance, which is been lesser than the passive performance, वो वापस आ जाएगा जब active share is also larger. You need, if it is that you have taken certain stocks and we are not able to really put stocks into a portfolio, which is the reason why there's been underperformance, which means that you've taken active share, but if for whatever reason the calls have not worked out in the short term, then it will mean that वो वापस आ जाएगा. But if you are closer to the benchmark anyway, तो आपको benchmark की returns ही मिल जाएगी. What the data here shows is literally that currently Indian market में about 95%, 94% in terms of the large cap funds and 97% in terms of AUM really are below that 60 line. This means really that most of the funds currently are more 20 to 60 rather than above than 60. There are a couple of funds there which are above 60, which are genuinely active in that sense. But the situation is not the same in, say, a mid cap and a small cap, where the opportunities for creating a genuinely active portfolio are still there. And that is why you're able to see that what is happening in large cap is not the same as what's happening in mid cap, is not the same which is happening in small cap. The opportunities to create that portfolio are much higher, and that is what is really being seen. So in large caps, definitely that is happening. In mid cap, we are seeing that most of the portfolios are definitely still active. 62%, 60 and above is most of them are above the 60 level, and flexi caps maybe most of them again are above the 60 level. So this is what I'd like to focus on in terms of where is the indexation happening, and this is where you're seeing currently a lot of the market as well. So passive funds have done particularly well in the large cap space, and that is where we are seeing that as long as the portfolios remain relatively less active, the opportunity to create active is also a bit, the opportunity to create outperformance also becomes a bit less. The other thing which I point out is that this is another point that in terms of identifying the next big opportunities as well. Right? So you're creating your ability to create outperformance is when you are sizing a portfolio correctly and you are able to also look at identifying new opportunities. जो कोई देख नहीं रहा है. If you are able to find the next gem, the next small mid cap story which is going to become the next multi-bagger, तो वही that is one of the reasons why you'll be able to create a lot of outperformance. But इसमें what we are seeing is that the large cap space again, there's a lot of eyeballs on it. There is बहुत लोग देख रहे हैं, सब जानते हैं वो companies, and there is a lot of current focus on these companies itself. The same companies have been very well analyzed, and therefore the ability to create and have a differentiated call altogether is very, very different. It's very, very difficult as well. So that is how you're able to see that these are a couple of, this is the spot which is having the best place where passive funds are picked up as well. So in terms of performance consistency as well, we are saying that ability to pick a fund as well is a difficulty, and the funds which have got persistency are what you'd like to pick. Here we are seeing there's a difficulty of picking it. What a index or a ETF gives is a relatively stable kind of a performance. But what you have to embrace in an active fund then is volatility. The volatility which is there in an active fund is the source of its outperformance. But if you want to avoid a lot of that volatility, then a passive fund tends to be a better option. So in summary, what we are pointing out is that passive funds have witnessed a very rapid growth in the last 5 years. The net flows have been very strong into this category, and what we're saying is that it's not a coincidence. It's that it has happened at a time when there has been performance issues or pressures on an aggregate in the industry. But the active share provides an information about what the potential of the fund is to beat their benchmark index. And the majority currently are not as active as they can be. So we believe that an active fund is nothing about the benchmark, nothing like the benchmark, and the passive is all about the benchmark. And that's how the active funds and the passive funds are different. In a portfolio, when you have a genuinely active fund and a genuinely passive fund, together that creates a very different kind of a symphony. एक music बन जाता है, because you are able to have a passive which is providing more stable returns, while your active is creating the opportunity for having outperformance as well. So in conclusion, I think that is the core of what the portfolio creation can be looked at in terms of for the passives. So passives are where you are looking to be as close to the benchmark, getting stable and average results, but sometimes what we are seeing is that this average results also is better than the average performance of the rest of the market. Thank you.